Hi, welcome again to another edition of Market Analysis for today, October 4th, 2023. My name is Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. Well, it's getting ugly for markets. The Dow fell yesterday 1.3%, and means that the index has now given back all of its gains for the year. It was up 7.5% the August 1st of 2023, and the S&P 500 fall from grace has been slightly steeper, down close to the 8% since late July peak. Though unlike the Dow, investors owning it have still been rewarded this year. Bonds are largely to blame again. The yield on the 10-year Treasury note climbed to 4.8%, its highest level since August of 2007. The trouble is there's real momentum behind the bond and stock sell-off right now. Markets have decided to pay attention to the prospect of the Federal Reserve keeping interest rates higher for longer, and now is all they can see. Every market moving event, big or small, seems to be conspiring to add weight to the higher for longer narrative. The smattering of a Fed speaker earlier this week did their bid, as did stronger than expected job openings yesterday. So why not throw in some geopolitical uncertainty? This is being caused by the historic ouster of Kevin McCarthy as House Speaker into this mix also. So how does the bond sell-off end? One way is the Fed stops or cuts back on its bond selling. Another, more daunting end game is that something breaks. And that something breaks, we don't know what's going to break or when it's going to break. When it breaks, we'll know. All right, so investors could realize that enough is enough when it comes to the repricing. But for that to happen, economic data may need to help turn the tide on the rates narrative. So Friday's jobs report could be the place for that to begin. Signs of the labor market cooling could be enough to start changing minds, or at least stop the selling. So with that being said, what can we expect into today's market fluctuation? This is the Nasdaq. So we saw yesterday a red day after the JOLTS report. Yesterday also, because of during the JOLTS report on the 15-minute chart on the Nasdaq, I had identified a chart setup called dead cat bounce. So it was right about here. This is when the news came out, broke out about the JOLTS, market precipitated, it created a low, and from this low it rebounded, right? Rebounded, making a high, at least a double top or almost a triple top, and from here, that's the bounce, right? That's the bounce, and from here, the market continued to drop. I entered the position right around 17,450, 17,440, and it continued to move lower and lower and lower. Okay, so today in this 15-minute chart, will this continue? Will that continue? The movement to the downside? Most likely. Okay, most likely. Let me go back to the one-day chart, and this blue line that you see here along the way. All right, let me just pull the chart so you can see it. So this is the low of the year, and from that point so far, hitting, showing this trend line, which we were up, we're on uptrend. Well, it has bounced right now today. It's bouncing off of that particular line. So will this continue? Okay, well, we gotta climb back up into yesterday's net trading range right around mid-session, and that will give us an indication of whether or not it will continue. If we continue to see volume picking up and going back to meet yesterday's open. So that will be one scenario to look at before the market continues to go down, if that's the whole narrative. But if obviously we see some spiking in the 10-year yield, let's say it pops to 4.85, 4.95. Wow, that will continuously, obviously, precipitate the selling of of each of securities, and we'll see perhaps 14,400, 14,000 in the mix. But right now, what I'm looking at is for the markets to settle themselves out at the open. The markets most likely either will take a nice pop to the upside, or it will retrace and break in this trend line. If it breaks this trend line right here, you can be aggressive and sell the Nasdaq. As far as for the S&P goes, well, the S&P also is a doji, which it represents change of direction. So let's see if that will be the case. The Dow is the one that is bleeding out a whole lot. So 32,800 is that psychological level for it. Let's see if it will be mid today. Crude oil also is trading low. We see here this particular volume node of volume that was created at the beginning of September. So we need to blast through that and see if there's enough momentum to the downside to obviously value or break that level, this line. If it does that, it most likely will continue to push even lower, perhaps even to 80. But $100 is still on the horizon. This could be a good possibility for it to bounce if it comes down towards the 86.35 support line and then bounce off of it. But the RSI is showing some momentum to the downside since it's below 50. But anything can happen. Then we have Nat Gas that has come out of this range that it was for quite some time. Let's see if it'll revisit that high of August 9th. Okay, so $3. So we go with the momentum. Buy it. Then gold is looking to hold itself at around 1820. Will it do it? 1800 is a target for it. We are completely oversold. So let's see. As well as for silver, oversold. So 2050 will be that scenario. But will it find a way to recuperate itself? Let's see. That could be the case. Then we have copper also trending lower, pushing lower. 353 is a support. Then take a look at the currencies. The euro at least is looking to recuperate itself, hold itself above 105, climbing its way up back to 106, as well as the pound climbing itself up to 122. Let's see if 123 will be met, and that will happen if the dollar index continues to trend lower and goes back towards this bottom or this level of 105.85. So let's see if that will be the case. Well, that's it for today. I want to thank you for watching and see you next day.